Good evening, everyone. A warm welcome to all the participants. Would request everyone to be on mute while the program session is on so that we can maximize bandwidth with the stellar number of participants we have today, as well as everyone can have a clear reception of the audio as well as the video. Um, a warm welcome to all of you from the NHRDN Ahmedabad chapter. We are very thankful to all of you for coming in at such short notice. As we are all aware, the topic that we are covering today is a very burning and very priority topic for all of us. And without much ado, I would like to invite Mr. Israel Inbaraj to introduce our speaker for today, Mr. Anand Gopalan, barrister and partner at T.S. Gopalan and Company. Israel, over to you, please.
So thank you, Miti. Thank you. First of all, I would like to thank NHRD Chapter Ahmedabad for taking this kind of initiative, especially Miti. Within a day, she prepared the invite, and we took almost only 48 hours to get this done. And thanks Mayur Bhai and thanks Richa that for organizing this wonderful event today. And really thank Anand sir. Actually, Anand is known for us for a long time and very reputed. He comes from a very reputed firm, T.S. and Gopalan law firm from Chennai. It's a very, very reputed, and they practice labor law for almost more than 5 to 6 decades, if I rightly remember that. So mastery in labor law, and one specialty about the of Anand Gopalan is he's studied outside countries. Initially started with the income tax kind of what do you call income tax practitioners, income tax related laws. Then he has moved out of interest, more focused on the labor law, and he's I would say number one in the south part, especially on a labor law consultancy, giving a greater expertise and very, very polite and easily approachable. That's a very, very important thing I would like to say about Anand Gopalan. And anytime you are reachable, anytime his phone, he gives a solution for us, any complicated issues. Thanks a lot, sir, for this your acceptance. And this topic, as of all of you know that it's a very critical topic, need of the hour. That's why we felt it has to be offered for the bigger fraternity. To our surprise, we got close to 1,019 registrations for this program. Out of 1,019, we can permit only 500 people for the entry here because of the Zoom restriction. If it goes beyond that, you will have a live YouTube link will be shared in the chat box. You can share it across people who are not able to join here. So YouTube live also you can join, attend this program. And context for this, we all know that there is a judgment, and the judgment Supreme Court has given an order for the PF office to go ahead with giving an extra timeline for the people to enroll for the enhanced pension opportunity. And also based on which 20th EPS office, pension office has released a notification on this. And adding to that notice, I think all of you have seen that notification till such time, but there is a current live update is just now through CII. We had a call and discussion with the regional PF, Central PF Commissioner Pension Office. They have one good news is they are planning to extend the timeline for online registration of this option till May 3rd. That is another 2 months. Earlier, it was only up to the March 3rd. So they are going to extend this with the link. They are going to provide online link. So all the employers can encourage their employees to register through online, which will be opened in next 2 days. Once it is opened, you can register it. The employees can register on their own. It will be validated by the employer, and then it will go to the PF office automated. Everything is automated. Even if they have worked in a multiple employers, everything automated, online validated by the employers from the 2014 to till date. It will go to the PF office, pension office. Then pension office will accept or reject based on the data available with them. So that's the proposal. So good news is you have another 2 months to work on that. Earlier, we were thinking only 3rd March is the last date. We have another 2 months till May 3rd. We have an option to work on that. And there will be a link. It is going to be online, so it reduces a lot of our work and burden. But you need to required to keep a data entry operator in your HRD to work on that, help employees to feed the data inside the system. Right. So with that, this is a critical time. At this point of time, with a short span of notice, Anand Gopalan has come back to us in helping. Quick introduction about Anand Gopalan is barrister in law from London, and also is a second generation lawyer. As I told you, close to 60 years that firm is practicing on labor law in south part of India. and very good expertise. And he studied in the University of Wales, and he's actively involved in various employers forum like Madras Chamber of Commerce, very forums, and he's also appears in the Supreme Court as a counsel, and also he's conducted a lot of training program on labor law. I have seen very few people in India who can teach and explain labor law in a very simple manner, complexity to simplicity. That I have seen from Mr. Anand. He makes things very easy and simple for people to understand. And he's also chairman of the expert committee on labor law and the Madras Chamber of Commerce. And thank you for accepting our request. He provides a lot of guest lectures and talks, as well as the legal advice on labor matters. And over to you, sir. Ground is open for you, please. Anand, sir. One minute. We will have to unmute you. Just a second. Amir, can you unmute Anand, sir? Okay.
Avinash, either.
Avinash, you can give co-host to. Avinash can give co-host to Anand sir also.
Yeah, done.
And also screen sharing, please.
I think by default you will be able to share the screen, sir, or to be made as a presenter. Not it? Okay. Avinash, can you make him as a presenter, please? Done, sir.
Okay. Yeah, I think it's done now.
We would request you to even mute the video other than the speaker, so that the bandwidth is good enough for us to others to participate. Video, audio, both you can go on mute, except the speaker, please. Thank you.
Very good evening. Thank you, everyone. Thanks especially to NHRD Ahmedabad chapter for inviting me, and to Israel for a very elaborate introduction that he's given. Very generous one as well. Straight jumping into the topic, we are here to discuss this judgment. And what is this judgment about? So there are too many questions that are there in the minds of employers as well as employees. So let's start with the good thing for employers. Does this have any impact on the employers? It's a big no. There is no additional financial liability that flows on an employer, doesn't cast any kind of obligations, financial obligations on an employer. Yes, you may need to sign some documents and certify certain declarations, but apart from it, it does not cast any kind of obligations on the employer. What then is this judgment about? Well, basically, you should have been earning basic wages exceeding the ceiling limit, and your employee should have been contributing over and above the ceiling limit. So it's only to these that this judgment will be beneficial. So if, let's assume today your salary is 12,000, this judgment is not going to impact you because the ceiling is 15,000. Let us assume your salary is 20,000, but your employer restricts the contribution to 15,000, this judgment will not impact. So this judgment is only for those who are earning basic wages more than 15,000. That is, the wages are reckoned for Provident Fund should be more than 15,000. And on that exceeding amount as well, the employer should be counted. So this is the basic fundamental issue to be looked into. Thereafter, what are we looking? Why is this judgment? What is it that? See, currently by default, what happens is, you have, this is the formula for calculation of pension. So in this formula, if you look at it, they take, if your pension salary will be taken today, if somebody is to retire at 15,000, because that's the cap. And into the number of years of service divided by 70, and you get your pension. So in this example, if you look at it, you will be at 25 years of service. Somebody will get a pension of 5,357. But there is an option to get a higher pension. So what is this option about? So I'm just going to give you an illustration of somebody who's getting a basic salary of 40,000. So when you get a salary of 40,000, your employer contributes 4,800. That is 12% on this 40,000. You contribute 4,800, your contribution. this employee contribution goes straight to Provident Fund. So no issues at all. When the employer's contribution is taken, 4,800, 1,800 rupees is on the 15,000 ceiling limit. And then he voluntarily contributes above the ceiling limit. So on the 25,000 also he makes a contribution. Now on the mandatory contribution of 1,800, that is on the ceiling of 15,000, automatically 1,250 being 8.33 goes to pension. This is by default. And the remaining 550 goes towards Provident Fund. And when it comes to the voluntary contribution of 3,000 rupees, nothing goes towards pension. And the entire amount of 3,000 goes towards Provident Fund. This is the norm. This is what happens by default for any employee. This is where the employer pays on the entire salary and the salary is above 15,000. This is the manner in which the money gets distributed. But there is an option for the employee to say, out of this voluntary contribution that my employer is making, so that out of 8,800 that you see on the left-hand side of your screen, 1,800 rupees, 1,250 goes to pension. Out of the 3,000 that the employer has made, if you want something to go to the pension, there is an option that an employee could exercise. So in the same case, now if you look at the bottom line, once an employee can opt and say, okay, out of the 3,000 also I want 2,083 to go to the pension fund. So why will an employee want that to happen? So when we saw the earlier example of 15,000, even if the salary was 40,000, but if you cap it at 15,000, your pension will be 5,357, whereas on the entire 40,000, it will go beyond 14,000 rupees. So it's close to around 2.8 times higher pension you get. So a few more examples, if you look at it, if a person on 70,000 with 35 years of salary, he gets 35,000. 1 lakh salary, 35 years of service, 50,000. So basically you could get up to 50% of your last drawn salary as pension, provided you exercise an option. So what is this option is what is all this judgment is about, and when can it be done? See, when the pension scheme says that as and when you exceed the contribution ceiling and contribution is made on higher. So this is the old scheme prior to the amendment in 2014. The pension scheme per se it itself came into force in 1995. Then an amendment was brought in 96, wherein they said you can opt beyond the ceiling limit. So when we look at the wordings that you see in your screen now, so if at that point of time, let's assume 2008, that's when this R.C. Gupta case started. The earlier case, this is the first case called R.C. Gupta. In 2008, the ceiling was 6,500. The employer was contributing on 10,000. Then under 11.3, using this provision, the employee should say, I want the excess beyond 6,500 employer's contribution to go to pension because I want a higher pension. PF said, no, it should have been done at the earliest point of time. Whenever the wordings used is as it exceeds, he should have done the option. He cannot do it at his whims and fancies. This matter went to Supreme Court. Supreme Court came to the conclusion this proviso is not time bound. So in that example, 6,500 is the ceiling. Employer was paying 10,000. On the entire 10,000, 12% has been paid. 1,200 rupees has been paid by the employer. 1,200 rupees has been received by PF. Part of it has been put into The pension part of it has been put into the PF. Supreme Court told EPFO, see, money has come to you. 12% of employer contribution has come. You have put it into one bucket. Employer wants you to remove it from that bucket and put it into another bucket. This the employee can opt at any point of time. Don't give a restricted meaning to this proviso, saying he should have done it when, as and when he crossed the ceiling. He can do it at any point of time. This is what the Supreme Court concluded in R.C. Gupta's case. This judgment was, in fact, initially accepted by Provident Fund. Provident Fund organization issued circulars, and also employees opted. Some employees who had retired also repaid the money. Then Provident Fund had paid for higher pension to them. So all these things were happening in 18 and 19. Then Provident Fund woke up to say, oh my gosh, this is too much of outflow. We will not be able to survive with this judgment. So they filed a review against this judgment. So this is one line that has now been decided. One set of cases that has been decided is the review filed by the Provident Fund organization against this earlier judgment of Supreme Court has now been decided. The second is there was an amendment in 2014 by which, yes, ceiling was increased from 6,500 to 15,000. They wanted all those who had already opted for a higher pension to give one more option. And there are certain other amendments as well, apart from it. So all these were questioned. This amendment was questioned by employees in different parts of the country. And ultimately, these cases also, in fact, the High Courts held in favor of employees. And these cases all went to the Supreme Court. So the review filed by the Provident Fund organization against the initial judgment in R.C. Gupta, and also other judgments by, again, appeals by the Provident Fund organization challenging this amendment. So these amendments were struck down by High Courts. So Provident Fund organization filed specially petitions before the Supreme Court. Those also came, so both were clubbed together. So the review against the earlier order and the appeal challenging these amendments were taken up. Supreme Court held this amendment to be valid, but after holding it to be valid, made certain observations. Supreme Court in paragraph 44, which is the concluding para, says that employees would exercise the option under Proviso 11.3 of the 95 scheme, that is in the earlier scheme, before the amendment in 2014, and continue to be in service as on 1/9/2014, will be guided by amended paragraph 11.4 of the pension scheme. So that is the new scheme. Then it said, this is where many of you today may come in. Members of the scheme who did not exercise an option. So those who did not exercise option under 11.3, which was before amendment, and after 11.4, they said we are upholding R.C. Gupta's case. There was no cutoff date, and therefore members will be entitled to exercise an option. Either under 11.3 or 11.4, both, you can exercise an option. And it is in this paragraph that they talk about the 4-month timeline for giving an option, that is which is where we come to this 3rd March. And those who joined earlier would have heard Mr. Israel say the PF is contemplating of extending the 3rd March deadline by further, because there has been delay on that part. So they could go beyond 3rd March. And paragraph 44.5 said that those who have already left, they will not be entitled to the benefit of this judgment. That is, if you left retired before 1/9/2014, you will not be entitled to the benefit of this judgment. So this is the crux of the case. And they say that therefore they've given employees an option now to exercise for higher pension. The directions given are members who do not exercise option 11.3 would be entitled to exercise option 11.4 within 4 months. Employees who retired prior to 1914 without exercising the option, those people will not get. Those who exercise before 1914, they shall be continued and they shall be granted pension. These are the 3 primary directions that have been issued by the Supreme. So this is the brief of the entire case itself, and this is where it goes. So what is required as on date? There have been quite a few clarifications that have come, including the latest 20th February circular of EPFO, which requires employers to give a joint declaration so that the employees can opt for a higher pension. So, as an employer, you are required to sign the joint declaration, nothing more than that. Employees also are required to sign, get the joint declaration and file it. So, what is this joint declaration? The joint declaration is to the effect that higher contribution was made by the employer and the employee wants to take a part of that higher contribution into the pension fund. So this is what they want you to do. And there is then this classification of people before 1914 and after 1914. So that I'll just come to that. So we have 2 sets of employees who could then further be subdivided, subcategorized. So we have a set of employees who retired and left before 1914. Then we have employees who were members as on 1914 and continue to be on members thereafter. And also those who joined. So slightly deviating from this, let us assume that an employee, let's assume the employee completed his college in 2016 and he joined employment for the first time in 2016 and he became a member of Provident Fund for the first time in 2016. When he became a member, what was his salary? If his basic PF salary was less than 15,000, then alone he could have become a member of the pension fund. So if I joined at a salary of 12,000 in 2016, I would have become a member of the pension fund automatically. But if I joined at 18,000, 20,000 or above that, my membership to the PF itself was voluntary because only less than 15,000 needs to be made. I'm in fact an excluded employee, but I decided to contribute. My employer also decides to contribute. And both of us, so though my salary is 21,000, 25,000, I decide to contribute and my employer is also contributing on 25,000 of basic salary. But I cannot become a member of pension. I can only become a member of PF. Provident Fund portal allowed even these persons to become members. Now, Provident Fund has blocked that and Provident Fund wants employers to also correct it in a phased manner so that even by mistake, if somebody has made a pension optee, that is those who joined after 1914, those have to be corrected. Then we have the second set of employees who were members on 1914. So they were getting salary over and above 15,000 on 1914 or thereafter, or they retired after 1914 or continued to work after 1914. Their employer was paying on the entire basic salary exceeding 15,000. So these employees are now covered by the 20th February circular and therefore they can seek for a higher pension. The portal is supposed to be open soon and then they will be accepting applications or options jointly declared by the employer. And then we have these people who retired and left before 1914. Those who retired and left before 1914, the judgment of the Supreme Court says if you have already applied, your application was rejected, then it will be considered. But before 1914, if you have not applied and you have retired before 1914, you are not eligible. Well, there are certain doubts even on the correctness of this judgment because R.C. Gupta said even they can apply, and Supreme Court in this says yes, R.C. Gupta is correct law and you can apply. Therefore, this interpretation, how far it is right, is something, but let's not go into it today. So we are more bothered about those who joined before 1914, those joined after 1914. They can all become members of the higher pension, and you will be eligible to make an option for higher pension. It is an individual call to whether you want to higher pension or you're happy with Provident Fund, because there is going to be a drop in the Provident Fund that you take home at the time of retirement. But instead of that, you will be getting pension. So as I already said, the 4 months time starts from 4/11 and therefore 3/3. But the Provident Fund organization seems to have communicated that they will be extending this cutoff date by another 2 months. So first question that you will be asking if you want to exercise an option is, did your employer or all your employees at all points of time contribute to Provident Fund over the ceiling limit? If the answer is a yes, only then this judgment is going to have any impact upon either for you personally or for your employees. So this has to be a big yes, and only then the question comes in. So this is the gist of the judgment. This is what it is all about. So as I ran through earlier, the question is whether you want your employer's voluntary contribution also to go to pension fund, a part of it, or not. And yes, certainly there will be a reduction in your Provident Fund accumulation because, as we can see from this, if you see the 2 slides, in the first slide, 3,000 goes to Provident Fund in this slide. Over and above the 550 of the employer, which already goes, the 3,000 rupees is going. But after option, only 917 is going. So every month there's going to be a shortfall of 2,000 rupees going to the pension fund and to the Provident Fund. It goes to pension. Therefore, therefore there will be a reduction in the Provident Fund at the time of your separation. But then you will be getting much higher pension. You will be getting 3 times to 2.5 times to the pension could go up, or at least it could even be as high as 50% of your last drawn salary. So it's an individual call to be taken by each employee. As employers, maybe you could educate them on what it is and how it is going to be helpful to them. And it is, of course, it's the individual call of each person, what they want to do with it. But the sum and substance of the judgment is now you can exercise this option within 4 months. And employers are required to sign a joint declaration for it. So that is where I think I will stop here. Mr. Israel, we take questions, or I thought you had some kind of...
Yes, sir. We will take questions and we'll go for the quiz.
Okay.
Miti will help us to have the Q&A now. Miti, over to you, please.
Yes, sir. So, sir, we have a question. What if someone has worked for more than 35 years? Pension amount will be restricted at 50% or would it increase?
The pension amount would be restricted, not beyond 35,000, 35 years.
Okay, sir. Naveen ji, we hope it answers your question. The next question, sir, is that for new employees joining post 3rd March or post the new date of PF registration, would the choice or option be available as default for them?
No, can you please just repeat that question?
For the new employees joining post the new PF registration prescribed date, which was supposed to be 3rd March originally, would the choice or option be available as a default option?
No, as I said, see, 1914 is the cutoff date. If you join the PF after 19/2014 and your salary was less than 15,000 for purposes of provident fund, then by default you become a member of the pension fund. If not, you cannot become a member of the pension fund. I hope that clarifies. So the default is only if it is before, I mean, if your salary is less than 15,000.
Okay. The next question is from Mr. Pragdishwaran. He's asking, a person who joined in year 2012, the company paid contribution above 6,500. During the period, EPF had a wage ceiling of 6,500. So would he be eligible for the new pension scheme under EPF?
6,500 was the scheme. What was this company paying?
Company also paid contribution for above 6,500.
If it is paid above 6,500, yes. But by now, again, if he has crossed 15,000 and is it still paying above 15,000 will be another question.
Okay, sir. So if it is above 15,000 now, then he would be eligible, is it?
Yes, yes.
Mr. Ramaseshan is asking, I am about to retire next year. Is it okay to opt for the higher pension scheme?
See, we may not be able to tell you is it okay or not okay, but you are eligible to give an option. It is individual call. You know how your finances, what is possible, you can work out. So we are not giving an advice as to, yes, pension is a better option, please opt for it, or provident fund is a better option. We are only here to educate you, to tell you that there is a provision which provides for you to opt for a higher pension. So subject to what was spoken, if you are eligible, you could opt for a higher pension.
Okay. So the next question is, Mr. Sanjayan is asking, there's already a pensionable amount lying in the PF office based on that the pension would start after retirement typically. If he opts for higher pension, would the PF office add the existing pension along with the new pension calculation?
It is not that something extra gets added, sir. It is only that you opt. Therefore, there will be a reduction in your PF, but there will be a substantial increase to your pension. So they're going to transfer funds from your PF to pension. Therefore, you get it. So it is not like automatically you're going to get some higher pension just because you opt. There is going to be a reduction in PF, which will result in a higher pension, but it could be a substantially better financial benefit.
Right.
Yes.
So Mr. Mahesh is asking, his pensionable age of 58 was after 1st September 2014. He retired in 2016, but he doesn't recall being asked for option. So would he still be eligible for higher pension if he opts for it?
Certainly, yes. He can even now make an option.
Okay. And sir, Mr. Kunal is asking if employees have worked with various organizations, would it be sufficient to get the declaration from only the current employer?
The declaration that has been asked for at the moment is only from the current employer, the last of your employers. They have not asked for earlier, but then they would be verifying whether your earlier employers also paid over and above the ceiling or not. So that verification will be done by EPF.
Okay. Sharan from Wipro is asking that their employer is exempted. So how would they apply for EPS then?
So even if you are an exempted establishment, the Supreme Court has said the law is the same. It doesn't differ whether you're exempted establishment or with EPFO. Once you exercise an option, the trust will be asked to make good. And once you make an option and the Provident Fund accepts the option, then the trust will have to transfer some funds from your Provident Fund account that they hold to the EPF. So yes, you can make an option. Even the exempted trust employees can make an option.
Okay. Sir, Mr. Randhir is asking, he joined in 2015. So would he be able to opt for a higher pension?
It will depend on what salary he joined in 2015. If he had joined, sorry, I'm sorry. If he had joined with a basic salary of less than 15,000 and after that he is crossed, he can opt for a higher pension. But if he, even at the time when he joined in 2015, his salary was more than 15,000, then he cannot opt.
Okay. I'll take a few more questions, sir, because we also are short on time. Mr. Philip is asking that he retired in 2019 and he got his full PF amount. So would he be eligible for higher pension or he needs to contribute an additional amount?
He would be eligible for higher pension. He can opt for higher pension, but he would need to repay some part of the Provident Fund which he has already taken. And only thereafter he would be eligible for a higher pension.
Okay, sir. I'll just interrupt in between. I would request all participants to put in their comments and questions in the chat window. I see a lot of raised hands, but we would not be able to unmute audio for any participants. So Ms. Deepika is asking, in case the member passes away before retirement, what would be the pension for the spouse or the family of the deceased?
Family pension is also provided for under the scheme apart from EDLI. Therefore, there are benefits that goes into the spouse as well. But it won't be on a higher pension unless the employee is already opted for it. I don't know if Provident Fund is going to allow a legal heir to opt for a higher pension. But they normally are eligible for the spouse pension, which is around 50% of what they're actually entitled as pension.
Okay. Mr. Nagarajan is asking, in the earlier circular, there was an additional contribution of 1.16 to be made by employers. Is that still valid, sir?
There was no additional commitment of 1.16 on the employers. It was in fact on the employees. So there was a reduction in the employees' provident fund to the extent of 1.16. Supreme Court has said that that is bad law, but they've given Provident Fund time to either correct that law within 6 months by going to the Parliament, or they have to redo that and ensure that this 1.16 is not taken from the employees and they will need to give up that claim.
Okay. Mr. Jaimin is asking, he has been a PF member since 1998 and the basic has been higher than the ceiling limit since 2005 and PF has been deducted on higher wages. So how much amount would be taken by the EPFO? The difference on 8.3% pension from EPFO contribution.
It will be taken from whenever you cross the ceiling limit. All along, it will be taken for every year. So if you cross the ceiling limit in 2,500, from there on, they would be taking the contribution. 8.33 of employer contribution will be deducted from the time you cross the ceiling limit.
Okay, sir. So Mr. Prashant is asking, he's not retired but left his job in 2022 and is freelancing. So how can he exercise the higher pension option?
He would again need to approach his earlier employer, get a declaration from the earlier employer and submit it, and he would also be entitled to the higher pension.
Okay. So when higher pension is opted, PF gets reduced and hence the scope of utilizing PF loans, would that also get affected?
Yes, certainly the contribution in your provident fund kitty is going to get reduced, and therefore it will have an impact on your loans and advances.
And sir, I think you would have probably covered this. What is the maximum percentage for enhanced pension?
See, the formula is there. There is no percentage of enhanced pension. It is going to depend on your last round salary. So whatever is your last round salary, on that you will be able to take up to 50% will be the maximum. So that's the manner in which you will be able to get.
Okay. Mr. Gaurang Parikh is asking that if the enhanced pension is opted for, then would the differential amount need to be deposited to the EPFO along with the interest?
If you have already withdrawn, yes. If you have withdrawn your PF, because that provident fund would have fetched you interest as well. So whatever you have withdrawn, you will need to repay it. So in 2018, initially when the PF accepted the judgment and implemented the judgment, that is how they did. So they asked employees to repay the contribution with interest, and then they are allowed for pension, higher pension. But in most cases, if you look at it, if I was to repay today 4 lakhs, what I will be getting as pension arrears itself was like 6, 7 or even more lakhs. So though initially I will need to spend some money out of my pocket and put in some 4 lakhs, but within 2-3 months, once they process the pension, I was getting arrears. So when somebody who retired in 2010 per se, in 2018 when they opted based on the R.C. Gupta judgment, they had to repay a substantial amount. But the pension that they got from 2010 to 18 jumped up so heavily, 3 times, 2.5 times. So that arrears amount from 2010 to 2018 was so high that compared to what they repaid, what they got was much higher.
Okay, sir. Sir, there is a question. A person has moved multiple companies, but not really transferred the PF from the previous employers to current employer. So would they be eligible for higher pension?
If all their employers have been paying above the ceiling limit, the amounts have not been withdrawn. Provident fund amounts have not been withdrawn at any point of time. And then even today, you can use your UAN, go back and try to club all your earlier employments and claim for higher pension. Yes, it is possible.
Okay. So Mr. Pawan Kumar is asking, during his total service of 10 years, he worked for 7 years in an exempted organization. So would this be considered during pension calculation? At the present
Yes.
time, EPF is with the government.
Yes, the period you worked with an exempted trust will also be taken, provided those years also the payment has been made over and above the ceiling. If your salary was more than the ceiling and if the employer has paid more than the ceiling, yes.
Okay, sir. So Mr. Srinivasan has retired, but he's saying his amount is still lying with the PF. So would he be eligible to opt for new pension?
It will depend on when he retired. If the retirement is after 2014, yes, certainly he can also opt for a higher pension.
Okay, sir. Yes, I think, sir, most of the questions other than this are more or less a repeat of the questions which have been asked already. So the proceeds, Mr. Suresh is saying the proceeds from EPF in EEE and the pension is EET. Is this beneficial for subscribers or should they stick with PF?
See, as I said, we are not here to advise you on which way to go. We are here more to educate you on that there is an option. So somebody came to me and said, in my family, the longevity is only around 62 years. We don't survive. So I don't want to opt for the pension. I prefer PF. But there is somebody else who says, oh, my grandfather is still alive at 90 and everybody in my family, lives for a long time. So I prefer pension. So it's all an individual's perspective on what is good or right, or how do you feel about it. You want ready cash, or you're more worried about your old age and you want a higher pension. So we are not here to advise you on which is right or wrong. It is for you to know that there is an option available for you if you so desire for a higher pension, and you need to exercise this option within the time frame fixed for it.
I agree, sir. Sir, there's one more question. If someone opts for this scheme now and they would want to withdraw, opt out of it in future, is that an option, or once?
No, it is not an option. It's a one time. Once you opt for the scheme, you cannot go back on it.
Right, sir. Yeah, I think the other questions are all, sir, where everyone is asking for their own dates and etc. So I think we could close the Q&A session.
Okay.
Over to you, please.
And thank you, Miti. Friends, what we have learned from Anand sir now, quickly we are going to validate through a quiz now. It's a gamified way of learning, just 10 minutes. I have shared a link in the chat box. Please click on that. It will take you directly to a quiz. Quickly know what we have learned, validating that once again, we can get it clarified. So that you can always straight away jump into that. Click on the link which is given in the chat box, and it will take you to a Google Chrome or Microsoft Edge. There is a Kahoot game. So you can log in and start doing the test, so that this is, don't worry if your actually score is less, your name will not come. Out of now we have around 365 people. Out of 365 people, we'll have only top 5 will be visible on the screen. Others' name will not come. So not to worry about the confidentiality of your scores and all. So quickly you can log in. Actually, up to 500 people can be accommodated in the Kahoot again. You will, at the end of quiz, you will have a perfect knowledge. I can assure you that about what you have learned from this particular session now. You can always go and easily coach and educate people on this if you are going through that. It is already shared in the chat box. Amir, maybe we can type the copy and paste it once again in the chat box, people, if they're asking again repetitively. Or else also you can type Kahoot, www.kahoot.it, and also you can enter your game pin. It will ask for a game pin, then go for your short name. Okay. Game pin is 947 9533. And it is Kahoot.it. It is not the it is not Kahoot.com. It is Kahoot.it. So you have to type Kahoot.it and you will get no. And I'm sharing the screen. How many are already logged in? Let's see that how many are logged in now. We have 154 people already logged in. If you are logged in, your name will appear on the screen. So quickly you can enter your game pin and log in here. Also, the game pin is visible from my screen. I'll give you another 1 minute for all of us to quickly log in. Then we'll start the quiz. It is a gamified way of learning. Okay, it's not to test your knowledge. Gamified way of learning. Even if you are not actually got the right answer so far, in this quiz you will get to know what is the right answer for us. Around 84. You can click the link in the chat box. That will automatically take you to the quiz right now. people can mute their camera so that the bandwidth is okay for them to perform the test. You can do it through your mobile also, mobile as well as computer, whichever, wherever you have internet, you can do that through that option. We have around 220 people are there on the screen now, 224. So we have 330 out of 330. So for another 100 or 8 to log in. So quickly, another 30 seconds, quickly others can log in. It'll be very interesting, actually. Don't miss out. Okay, I'll wait for 250. If it is reaching, then we'll go for a quiz, and people can join also in between by clicking the, and anybody is on the YouTube also, if they want to join, they can join through the link and Zoom link, and they can participate in the quiz now. Through YouTube directly, you can't do that. You have to log in through the, you have to join the meeting through the Zoom. From there, you can get this option. Another 18. There is no password. There is no password for no password for this. Just click the link. You will straight away go there. It's a click the link which is shared in the box. Otherwise, www.kahoot.it. I think you would have gone for a kahoot.com. If you are going for a .com, then it will ask for a password. If you have gone through the kahoot.it, no password. It will just ask for a pin which is there in my screen as well as in the chat box. You can enter that pin for joining. It will also help you to, across India, where you are standing in terms of the PF basic understanding. Others cannot see your score unless if you want to display. Recording, we are doubtful, but I think YouTube will be live available. If you want to have these slides, PPT, we'll check with the Anand sir if he's okay. Then we'll share it through the email to you across. Okay, I'm starting the quiz. Anybody wants to join, they can join parallelly. Okay. And I'm hiding the screen for a minute because sometimes people go to my screen and start trying to answer it. Please go to your screen. I've actually unshared the option so that you can find your screen to answer it. Please answer from your screen. Venkatesan, why you are trying to share the screen, Venkatesh? Okay, now I think you are able to understand the process of how this happens. And okay, so around 123 people have answered with this 20 seconds time. Certain questions will have 30 seconds. So first question is about what kind of benefit schemes are available under EPF Act. 123 rightly answered. Still, I'm sure most of them are HR people. Still, they have a doubt whether PF or ESI pension. All three schemes are there in the PF. So who are all actually wrongly answered? Nothing wrong. They have an opportunity to learn, which is the right answer now. Okay, let me move on to the next question. What's the contribution split under the EPF Act? How the contribution as of now? These are all as of now, without considering the judgment of the EPF for no recent judgment. It is as on date. What is the status? Based on that, these questions are asked. Last 4 or 5 questions about the new judgment. So there are 3 things actually. One is the employee contribution in the entire process is not at all touched. Many people have asked this question in my previous session also. Employees contribution 12% is in a PF. Nobody is going to touch on this. The discussion, the judgment, everything is happening only on the employer contribution. Employer contribution, what's going to make the changes? So one is 1,250 going to the EPS as of now, and beyond 1,250, whatever is actually deducted. For example, if the wages are more than 15,000, that will again go back to the PF account only. So that's the major split as on today. about the employer-employee contribution. I'm not talking about the EDLI now and all, because that's not all basic PF Act. We are not touching that now. Right. So any questions, people can raise the hand, then we can answer also. Otherwise, we'll move on to the next question quickly. EPF will be paid to employees as on dash on separation of employment. When it is paid, employee provident fund, when the employees are getting, how they are getting, when they are getting it. Okay. Right. Still 53 people have wrongly answered. The question is about EPF will be paid to employees as a lump sum with applicable interest. The provident fund which is being paid, it is paid, it is like a recurring deposit with applicable interest. It is getting accumulated and reaches your account at the time of separation of employment, or either it can be resignation or retirement, whatever may be the different ways of separation of employment. At the time, it will be reaching the account. So that's the EPF is getting distributed. It's not all the above. We are talking about only EPF in this question, right? EPS. Now we are talking. Question is about the pension. How the pension is payable. Very, very simple logic question. How the pension is payable. Okay, 169 people rightly answered, even actually around 19 people, they have a doubt. Pension is paid monthly pension, that's all, right? And 2 people are saying after term insurance. It is not an insurance. Pension is paid on a monthly pension after separation of employment based on other eligibility conditions. So that's the difference. So first, initially we have seen the previous slides question, we have seen lump sum with the interest applicable, PF is paid, and the monthly pension is paid based on a monthly basis. This is the second option, right? So now the second benefit we have seen. Now we are going to the next question. Contribution for EPS, that is a pension. People from Tamil Nadu should not get confused out of the name initials EPS. So this EPS means employee pension scheme. To be deducted from the maximum wage ceiling of dash. To be deducted from the maximum wage ceiling of dash. Contribution for EPS. Okay. 15,000 rupees for no, it is repeatedly answered as saying that contribution towards the pension goes only to the extent of 15,000 as on today. As on today. Even if your basic wages is 20,000, 25,000, but the pension contribution is made only on 15,000 rupees. Something goes beyond 15,000 rupees. That contribution amount is automatically going to the PF account. So that's the clarity now, right? EPS contribution is, what is the contribution? This question may have around, I think, 30 seconds. You can read one by one. So 142 people are rightly given. 8.33% of employer contribution to the extent of 1250 as a contribution is being paid to the maximum. That is to the extent of maximum 1250, or whichever is applicable. Lesser means lesser salary means lesser amount is being paid to the EPS contribution pension actually. So this is what the point that is going to have a discussion, and what we discussed about this particular point. If it is more than my salary is if it is my contribution works out more than 1,250 towards the pension, what should be done? That is what the point of question now. Basic wages 25,000. Let's assume it is 25,000 per month. Employer contribution exceeding 1250 is being paid to dash as on today. As on today, without considering the PF judgment, where it is being paid as on today. Okay, 113 people have rightly answered. Others answers they can validate now, which is wrong. Any contribution beyond 1,250 from the employer contribution is straight away going to the EPF. I'm not putting the percentage and all here for easy understanding. The employer contribution beyond 1,250, if it is there, it directly goes to the PF account. Beyond 1,250, it is not accepted in the pension scheme at all. So that's the another learning now, right? And Vasant continue to be on top of it. Next. Formula for calculating pension. Formula for calculating the pension. What is that formula for calculating the pension? Because many of you are asking whether pension formula, what is the formula, or is going to change and all. How this pension is calculated. Okay, it's right. 162 people have rightly given. The answer is last drawn wages, 60 months average, number of years pensionable service divided by 70 is the right answer. Many people are asking, actually, will that change based on the, see, two things you have to understand. PF is dependent on, proportionately dependent on your contribution rate, how much you are contributing in that interest. But your pension is not proportionate to your contribution. It is proportionate to your number of years service and last drawn wages for the 16 months. That is 5 years wages. Average wages of last 6 months, 60 months wages. So pension is purely based on this formula. It is not based on the proportionate to your contribution towards the PF scheme. So that clarity must have it actually. And somebody has asked the question, is there a proposal for changing that calculation because of the heavy load? As of now, we have not seen that in any of the books of records or anywhere in the proposal in the government through our interaction with the CIA and other forums. But looks like the if at all, if there is a change, it has to be rooted through the parliament amendment in the law, right? Because this is a law. So they cannot change it. They have to root it through the parliament law. At present, the employer contribution exceeding 1250 is, I think this question is repeated, but still, let's see that how people are answering. Same question, already we answered it at least. I'm sure this time people should answer it rightly. Okay, again, there are people wrongly answering. Please understand the employer contribution exceeding 1250 as a contribution always goes to the PF account. So they can learn now in this question now, right? So now we are going to have another 7 question on the proposal, what is presented by Anand sir, because knowing the current and the future and the proposal is more important. Just like that, it's not, we need to learn. So that's why we have put this option here. So 1 second, somebody has crashed my screen. So I will erase it. Right. Okay. Right. So what is that new changes based on this pension scheme? That is what the judgment, everything. So whatever we learn from Anand sir's session, that we are going to test and validate through these questions, which is going to come now. As per Supreme Court judgment, employees can, new scheme. What is that employees, as per the Supreme Court judgment, employees can opt to what they can opt for. Okay, 61. See, the right answer is as per the Supreme Court judgment, employees can opt for 8.33 employer contribution without limiting to 1250 will go to the pension scheme. As I told you repeatedly, currently the employer contribution only 1250 per month can go to the pension scheme. But moving forward, the higher, for example, the contribution works out if your salary is more than 15,000 basic salary, then that excess amount, whatever is over and above 1250 also, currently it is going to PF scheme. If you are opting out, if you are opting for this, not opting out, opting for this new scheme, new proposal given by the Supreme Court order and the PF authorities on 20th February, that amount also will go to the pension scheme. That is the change is going to take place. If you are not filling the form, you are not opting out, the blue box is right. It will go to the continue to keep in the PF account. So what is the new changes? Option given is, instead of it is currently going to the EPF account, that amount of employer contribution over and above 1,250 will go to the pension fund. So that is the change it is going to take place. Major, just in one slide, you will know what is this changes is going to take place now, right? How employer contribution, that is employer contribution 12% will be remitted as per current and new option, both for a basic salary of 25,000. Just slight bit of calculation is required. How the employer contribution 12% will be remitted as per the current and the new options of for a basic salary of 25,000 rupees. Okay, so both the options, both the above is right. How is that actually? For example, the current option, what happens is 1,215 to the EPS and 1,750 is the to the Provident Fund account. Whereas in the new option, if you are exercising the new option, what will happen is 2083, that is the 8.33 of the employer contribution from 25,000 and 3.67% of this 25,000, that will go to the Provident Fund account. That's the change. If you are opting for it, if your salary is 25,000, this is the way that change is going to take place. Anyone would like to have any questions on this? Maybe you can raise your hand or you can put it in your chat box so that you can get it clarified. Already, Anand sir is very threadbare. He made it clear for all of us. Okay, I assume that no questions. Okay, let me move on. Two participants are raising the hand. Okay, you can. Amir, can you help us to unmute them and let them ask question quickly? On this question or whatever so far we have gone through. Yes, you can speak. Yes, please.
Good evening, sir.
Good evening.
Sir, my just a question. Earlier, the limit was 6,500, and today it is a 15,000.
Yes.
If the employer had contributed to the pension only on 6,500 and currently on 15,000, irrespective, his actual basic was more than 25,000 at the time of 6,500 also, will he be eligible to opt for higher pension?
Provided the current basic is more than 15,000 now. And the contribution is also made based on that to the PF account. See, it's just a diversion. Instead of paying to the PF account, you are paying that excess amount to the pension account. That's the only difference they are doing actually.
Okay. So the employees who were the members before 2014, September 2014 were the member of EPF, and they were contributing the PF above the ceiling limit will be eligible.
Yes, even now, if they continue to contribute now also, they are eligible if they are more than that.
Okay, sir. Okay.
And that eligibility, you have a question in the next screen. I'm actually preempting those questions. So we'll cover the answers which are all in the previous questions. I will come back to that maybe at the end. After 17th question, I will answer those questions again. Yeah. 7 people have raised the question. Okay, let's then, paucity of time, I'll move on and finish this and we can answer the other questions at the end. Because some of the questions already covered in the quiz here. If the employee opts for diversion of employer contribution exceeding 1,250, there will be, that is, if he is exercising the new option, what is the outcome? What is the result out of that? What will happen? What is the impact? If the employee opts for diversion of employer contribution exceeding 1,250, what will be the impact? Clear now? The screen makes it clear for you. What will happen if you are diverting? Automatically your PF accumulation comes down and pension in the future will go up because the future based on that base salary against on which that you have contributed in the last 6 months, that is going to be used for a calculation purpose. That is going to be a multiplication factor for arriving your new pension. That is why your pension will go up in the future Whereas the UPS accumulation at the time of separation of employment is going to go down because the same amount just they are diverting from this account to that account. So both are going to happen. One way reduction means other side increase. One side increase means other side decrease is going to happen. So that's the change going to happen. Vasant, you missed it. What are the eligibility conditions for opting for the enhanced pension? Now somebody asked this question. No? What is that eligibility conditions? Already Anand sir explained it. So what is the eligibility? What are the eligibility conditions? Okay, 104 people have rightly answered. What is the eligibility condition? Very clear, very simple and clear. Should be a member of the PF fund prior to 1/9/2014. Number one. Or should become the member of after 1/9/2014 with a salary less than 15,000 people. But now currently if they are part of the pension scheme now, and if they are getting, the third condition is the employer contribution is on the basic pay without a ceiling of 15,000. Your salary is 15,000 means they are not stopping at that stage. The employer is contributing beyond the statutory condition as a voluntary. They are not mandatory. The employer can always stop the contribution up to 15,000 only because that is a statutory limit as on today. But if employer is contributing more than that amount, then they are eligible to apply. So these conditions, the first conditions either are, the second condition, if you see that it is mandatory, that yellow is a mandatory condition. These two conditions have to be met for you to apply. If you are not meeting this condition, then you cannot opt for this new scheme. And the next slide, it will give a better clarity. Next question, who cannot opt out also, opt in for also, right? Employer contribution is restricted to wage ceiling of rupees 15,000. Not eligible to exercise this option, true or false? Employer contribution currently is restricted to wage ceiling of 15,000 only. They are contributing, or already your wages also less than 15 or less than that only. So you are not eligible to exercise this option, true or false? Okay, 94 are rightly answered. Again, this is statement. You can remember this. Your wages ceiling contribution is only up to 15,000, then you are not eligible. In between, I want to add one more point during this today's session. No, EPS pension commissioner has answered this. For example, in the last 2014 to now, only a few years I have more than the pension contribution, more than the 15,000 contribution. Few years it was less than that because I was in a different employer. That employer wanted to contribute only up to 15,000. Few years. Then that madam was saying that no, it is not possible. That kind of a thing, it should be consistently all the time. Should be above the statutory limit. But still, further clarity will come on that in the future because we have another 2 months time is given by the PF authorities for uploading the form. You will get further more clarity. Few more sessions also we are thinking to approaching the PF office itself to connect with us so that directly we can also hear from them on the practical issues. Now we had a clarity on the judgment and the notifications, but the practically how the implementation process also we are trying to connect with the PF office to have a session like this so that we'll have a better clarity from them straight away. New employee joined on 1/9/2014 or after with a salary of 15,001 or more are not eligible. New employee not having PF account. Their first college from straight away from campus. They never worked anywhere. They joined after 1/9/2014 or after with a salary of 15,000 or more. In the basic salary, I'm talking about PF wages. So they are not eligible to apply. True or false? It is true, they cannot apply because they are actually never been as the part of the pension scheme. So they are not eligible to apply now. Last question, how an employee can exercise this option for enhanced pension? Okay. So either of the option is okay, but today's call, this question was done before today's call with the PF Commissioner, Pension Commissioner. So what they are saying, orally they said, written it's not given, orally they are saying that the timeline for submission of the joint declaration is going to be extended till 3rd May. So that is point number 1. I'm repeatedly saying that. As per the EPFO notification, it says only 3rd March, but as per the judgment of the Supreme Court also it's 3rd March. But the proposal is there in place by the EPFO office to extend the timeline till 3rd May. That is what we heard orally. I'm repeating this word, we heard orally in the conversation today we had with the Pension Commissioner. And the blue box is going to be the future truth. That's what Madam also said. They are going to update provision, create a provision for update through online. That online declaration, many people ask this question also, what will happen to the previous employer? This will automatically trigger because every employees are expected to fill their last wages based on which this has to be calculated. That based on the data what you are giving, it will go to the employer, current employer and previous employer who has contributed more than that, whatever period you mentioned. Automatically from the system, they have to certify that. Based on that certification, PF authorities will approve your application or not. So it's all going to be the mode of operation is going to be still furthermore, they are going to explain that. So as on this point, at this point of time, I would request all of us to not to be much worried about the mode of operation now, because another 2 or 3 days, they are going to release the mode of operation. As of now, if you understand who is eligible, who is not eligible, and if you are eligible, if you apply, what is the impact you are going to get? If that clarity is there among us, this session has really done its job, I would say. Operational things more has to be determined the PF office, which they are going to release it. So we'll wait for the next update. So let's see the top scorers who's really performed well and on the podium now. Infin, we don't know his name and all, Infin, and another person is 14623. He has given his employee ID, I think. Or another is 14690 Vasant. Okay. Sorry, Vipin, Infin, Vipin, Vasant, then Nirma and Amulya. These are all top winners. Congratulations for the winners for your excellent performance. Pan India, you have proved your performance. Thank you very much for the active listening. I know it's a very time constraint that we are operating. A lot of people already we have run out of overshooting the time. So that's why I'm leaving it. But the questions are there. Very critical questions definitely will answer. Over to Miti, please, and Mayur Bhai.
Thank you so much, Israel. I would now like to invite Mr. Mayur Patel, President of Ahmedabad chapter, to conclude the session and give our vote of thanks to Mr. Gopalan.
Thank you, Meeti. Thank you, Mr. Gopalan, and thank you, Israel, and all participants. It was so wonderful. And Mr. Gopalan, you made it so simple. In just half an hour, you made everything so clear. And probably Israel could pull out so many questions out of that just to reinforce the learning what we can have out of this. Israel, I really failed to answer these questions very well. So I think this is a subject not getting into my head. But a lot of interest from the people side here. And I think what you mentioned that, yes, we need to have more clinic on this so that I think the more practical aspect which are coming out of this, I think we can share with the participants. And like always, since last conference, what we had in Ahmedabad on 4th of January, Leader 2030 role of HR, we had 1600 participants. Today also, we reached almost 414 participants at a peak level. Still, we have 200 people joining here. And thank you very much, Israel, for making it, gamifying it, to make the learnings very important and to carry back with us. And especially thanking Mr. Gopalan once again to spare the time and guide this audience on this very important topic. Someday we would want to have you here in person. So look forward to that opportunity and look forward to everyone's participation with NHRDN program, which are coming up in coming months. So please stay tuned. I also thank on behalf of entire committee, our Vice President Ratna Maraj is here, our Secretary Hemal Bhai is also here, and Miti and other team members for leading this initiative. So please stay tuned with the NHRDN Ahmedabad chapter, and we will bring in more such very useful programs to you. Thank you very much. Wishing you all a very nice evening, a great weekend ahead. Thank you.